What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to be talking about why tomorrow is going to be a massive day. There are some important warnings you need to know that can affect Tesla because CPI is coming out. It's going to affect our economy, everyday people's lives, how the Fed responds, the US stock market. It's going to be a huge day as CPI is coming out. So I'm going to talk about everything you need to know. Now, before I get started though and get into any more details, I got to mention a couple of things real quick. Firstly, I'm not a financial planner. Do not take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $2,000. And you could always sell these 6 free stocks for cash and use that cash to buy some Tesla shares for free in this limited time offer that now ends in just 2 weeks. With that out of the way, let's get on with the video. So anyways, looking at Tesla, I predicted in my previous video that we would see a push around that 750 range. We ended up going a little bit higher to about 766, but then I warned you that we might see a red day today because I predicted that we'd get a bit of a sell-off towards the rest of the day, and that's in anticipation of the CPI report. Now, just because we sold off already and the market took one hell of a hit, if you actually look at how it performed, Tesla was down just 0.89%, which isn't necessarily that bad. It's a little bit green in the after hours, but looking at the SPY, check this out right here. The SPY started off kind of okay, trading kind of sideways. Then all of a sudden, we got this giant drop down 2.38%. We ended up closing at 401. So we could see there's some panic and there's a lot of uncertainty. Not necessarily panic, at least as of right now, but it's more towards uncertainty, okay? The market's very uncertain about what's going to come because there are lots of negative reports coming out about CPI being potentially worse than some people may expect. Now, let's actually talk about CPI. Why is this so huge for Tesla and why on earth this is extremely important? It's going to essentially affect everything in our economy right now. So going back right here, the CPI, or the Consumer Price Index, and it's a measure used by economists to track price changes, and typically it uses basket goods and services that many consumers buy. But another thing about it is, depending on the measure you're using, certain things can be included or not, but that isn't necessarily what we should be worried about right now. The Bureau of Labor Statistics is going to be reporting this tomorrow, I believe before the market opens, so it's going to be huge. Now, the reason why this is so big is, look, there are different reports out there that are talking about how right now, okay, inflation, or the quote unquote measure of inflation, which is CPI. And I've mentioned this before, it's not always going to be perfect. In fact, it has a tendency of either overstating or understating, but this is what the market kind of uses. So that's the reason why it's important. So anyways, what I was saying was, a few months ago, okay, I think it was reported in April, that's when we saw the peak. That's when it got really high. And that was like at 8.5% during that time. Then in May, which was last month, it came out, it was at 8.3%, right? The change, 8.3%. So it started to decrease a little bit. Now, what we want to see is another decrease. We want to see this thing continue to decrease. Otherwise, it won't be too good. And unfortunately, we're seeing some new reports coming out from many economists that are suggesting it may not actually decrease. It might actually be the same. It may actually have increased for the month of May. If we look at this right here, let me see if this comes up. CPI forecast to show 8.4% yearly increase. So that's essentially what many people out there, such as Wall Street analysts and Bloomberg analysts as well, are essentially reporting or predicting. And then we can see right here, even MarketWatch is saying the same thing. It may show another big gain, so that's not necessarily a good sign. They are saying that the forecast is at 8.4%, which is an increase compared to last month. Now, this not guaranteed just yet. Obviously, there were lots of articles that said this last month too, but we actually saw a decrease. So for this month, we'll have to wait and see because it's very hard to tell. And another thing that's important is, this is going to be the outlook as how well the Fed is doing their job. What are they going to do differently if it keeps on remaining high. Janet Yellen herself stated that she expects it to actually remain high, but she's hopeful it starts to decrease soon. So as a result of this, the Fed is going to change their policies depending on what is reported. If it keeps going up more and more and more, then the Fed is going to have to become more hawkish, and they're going to have to be forced to increase rates even higher, which in turn is not going to be great for our economy. It may even lead to a potential recession if it gets that bad. It's just not confirmed just yet for me to say that. Now, another thing that's big is, I think on the 14th, we have the PPI data coming out, which is very similar to the CPI, but it just measures the selling prices for a lot of manufacturers and domestic producers. So that is also going to be pretty big. And another big date for next week would be June 14th through the 15th. We have another FOMC meeting. So we're going to have to see what the Fed ends up doing. And they're most likely going to actually raise rates again. So my main argument right now is that the market is kind of, how should I say this, in a very key point right now. We're in a key point because the question is, are we going to just kind of increase from here, or are we going to see a big rug pull and the market's going to start dropping? Right now, it's in the middle, and it all depends on CPI. That's the biggest factor right now. We knew about the Fed raising rates. That's no surprise to us. But CPI, that's where things become very capricious, and that's where it can affect not just Tesla, but the whole market, our economy, the rates, the cost to borrow, a recession, all those things. So here I kind of mapped out some of the potential levels to be looking out for, and I tried to highlight them in a color that's kind of makes it easy for us to see the text. So I want to let you guys know that if CPI comes out tomorrow in the morning and it's at 8.2 to 8.3%, or even higher than that, that's going to be bad. It's not going to be a good sign because we want to see it decreasing. We hope that it already hit its peak 2 months ago and it's starting to go down. We want to see that. If we're not seeing that, the market may take a big hit. If it comes out at 8.4%, 8.5%, that's going to be horrible. The market could actually see a big rug pull. Now, that's not guaranteed. I'm not trying to spread FUD. The only reason why I'm actually a little bit cautious, and I recommend being extremely cautious, is because a lot of reports and a lot of analysts are kind of estimating that it's going to be a little bit higher than many people would like. Now, that's not guaranteed just yet, right? It depends on the report. Sometimes reports kind of are very different from expectations. Now, when it comes to the levels of 8% to 8.1%, it's going to show another decrease. So it shouldn't be too bad. And it should actually be kind of okay because we want to see it decreasing. Now, if it somehow miraculously comes out at 7.9% or lower, that's going to be great. And the market could actually see a bit of a rally if that's the case, because this issue, this inflationary issue that's kind of impacting manufacturing, these inventories across the USA and other countries, that in turn is not going to be as bad as some people would have projected, and that would be very good. So there's no way I could really predict this, okay? It's so difficult because what we're essentially doing is we're predicting it based off a margin of like 0.2 and 0.3%. What I mean by that is, okay, I'm pretty confident it's going to be somewhere between, I don't know, 7.9 and 7.5 and like 8.5%, for instance. But there's no way I could go so into detail to the point where I could actually know where it's exactly going to be. So that's the reason why I can't really do a perfect prediction. What you need to do as an investor is be prepared for this. Keep your eyes on this report that's coming out tomorrow morning, okay? Super, super important. And as an investor, it's very important to note that this data is going to affect the entire markets. You should be prepared for anything, strategize accordingly, and be very careful if you're trying to play options or if you're doing anything else like that. Now, the last thing I want to say is I'm a very optimistic individual. I'm super, super long-term bullish for Tesla. I think Tesla's going to run to the moon in many, many months, maybe by next year. But for the short term, it's very, very capricious and it's very dependent on different factors and data. So I'm going to just talk about the key zones, and that's essentially how I'm going to end this video because I can't really do a perfect prediction. But if this thing starts dropping, okay, if Tesla starts dropping, look out for 700. Hopefully 700 holds us if it's not that bad. If it's really bad, we could drop to that 680 level or even lower than that if things are like horrible. But I don't really know if it's going to be that horrible. We'll have to wait and see. If we do get a nice bounce, 730 has some resistance, 750 to 752 is the next resistance level, and we could push that 766 to 776 level, which is where we have that gap, so it might actually end up filling. We'll have to wait and see, but I'm just putting it out there that that's the more bullish possibility depending on the report. So just watch it closely, stay strong, remain optimistic, and trade accordingly, or do whatever you need to do to stay safe and be strong during these times. With that out of the way, I want to thank you for listening. Have a great rest of the day, and I will see you guys in the next one. Tesla to the moon, and peace out.